Hey traders, welcome back to Hope Pips. If you're looking to level up your Forex trading game, you're in the right place. Today, we're diving into a powerful strategy, how to take trades when the Forex market forms high volume candles. These candles are like neon signs in the market, signaling big opportunities, if you know how to read them. In this video, we'll cover everything from identifying key zones to spotting high volume candles and taking confirmed trades. Plus, I'll share real chart examples to make it crystal clear. If you're new here, hit that subscribe button and ring the bell so you don't miss our weekly trading tips. Ready? Let's jump in. Everyone, I hope everyone is fine. Welcome to our channel. If this is the first time you come to our channel, please watch our previous videos, then you will understand this topic well. I will leave those videos and playlist links in cards. Okay, without wasting our time, let's get into the topic. Here is the topic. Ready? Let's jump in. Have you ever noticed those massive candles on your charts and wondered what they mean? Drop a comment below and let me know. Identifying key zones in downtrends and uptrends. First, let's talk about identifying key zones in the market. Whether the market is in an uptrend or downtrend, these zones are your roadmap for spotting high volume candle opportunities. Support zones. These are price levels where buyers typically step in during a downtrend, halting the fall. Look for areas where price has bounced multiple times. Resistance zones. In an uptrend, these are levels where sellers push back, stopping the rally. Again, check for repeated rejections. Liquidity zones. These are areas above resistance or below support where stop loss orders pile up. High volume candles often form here as big players hunt for liquidity. To spot these zones, use a higher time frame like the 4-hour chart. Draw horizontal lines at areas where price reverses or consolidates. These are your key zones for trading high volume candles. How do you mark your support and resistance zones? Do you use indicators or just price action? Share your approach in the comments. Identifying consolidation zones. Now let's move to consolidation zones. These are areas where the market takes a breather, price moves sideways in a tight range. Why are they important? High volume candles often break out of consolidation, signaling a big move. Here's how to spot them. Look for a series of small candles with no clear direction on the 4-hour chart. Check for decreasing volatility. Think of it as the market coiling up like a spring. Use tools like Bollinger Bands or the average true range to confirm low volatility. When you see a high volume candle breaking out of this zone, it's a clue that big players are stepping in. But don't jump in yet, we'll talk about confirmation later. Have you ever been caught in a fake breakout from a consolidation zone? What did you learn? Drop it in the comments. Changing time frames. Next up, let's talk about switching time frames to refine your entries. We start on the 4-hour chart to identify key zones and consolidation. But to time your trades with high volume candles, drop down to the 30-minute chart. Here's how. 1. On the 4-hour chart, mark your support, resistance, or consolidation zones. 2. Switch to the 30-minute chart and look for high volume candles forming at these zones. These candles often have large bodies or long wicks, showing strong buying or selling pressure. 3. Use volume indicators like the volume profile or on-balance volume to confirm the candle's significance. The 30-minute chart gives you a closer look at price action, helping you pinpoint entries without getting lost in the noise of lower time frames like the 5-minute chart. What's your favorite time frame for trading Forex? 4-hour, 30-minute, or something else? Let me know below. Confirmation for taking trades at key zones. Alright, you've spotted a high volume candle at a key zone. But how do you know it's safe to trade? That's where confirmation comes in. Here are 3 ways to confirm your trade. 1. Candlestick patterns. Look for reversal patterns like engulfing candles or pin bars at your key zone. A high volume bullish engulfing candle at support. It's a strong buy signal. Volume surge. Check if the high volume candle is accompanied by a spike in volume compared to previous candles. This shows conviction behind the move. 3. Price action context. Ensure the candle aligns with the trend or breakout direction. For example, a high volume candle breaking out of consolidation in an uptrend is more reliable than one in a choppy market. Fourth one is if the candles forming by the market in the respect session are having more than 30 pips, then you can look at the risk to reward ratio first. Risk to reward means the amount of pips that we are taking against the reward. Nothing but ratio of stop loss pips to target pips. It must be greater than 1. Otherwise, it can be considered as invalid trade. So our first rule is if the risk-reward ratio is greater than 1, we can proceed further process. Or it is not greater than 1, we will shift to lower time from our actual entry time frame. In the lower time frame, we will again look for the key zones like support zones, resistance zones, wick fillings, liquidity zones, unmitigated zones, consolidated zones, and so on. If the candle are formed one of our setups with proper confirmation candle, again we will look into the risk to reward factor. Okay, ultimately patience is key. Wait for these confirmations to avoid fakeouts and protect your capital. What's your go-to confirmation signal for entering trades? Candlesticks, indicators, or something else? Share in the comments. Let's tie it all together with real chart examples. 1 week USD uptrend. On the 4-hour chart, EU/USD is in an uptrend, approaching a resistance zone at which price consolidates for several candles, forming a tight range. Then a high volume bullish candle breaks above resistance on the 30-minute chart, confirmed by a volume spike and a bullish engulfing pattern. This is a buy signal. The trade hits a 2-1 reward to risk ratio. 2 Yay. On the 4-hour chart, GBP/JPY is in a downtrend, testing a support zone. A consolidation zone forms, followed by a high volume bearish pin bar on the 30-minute chart at the support. Volume confirms the move and price breaks below support, signaling a sell. The trade yields a 3-1 reward. Example number 3. See on the 4-hour chart candles are forming higher highs. As that, we can consider that the overall trend is uptrend. So our bias is buy side. We have to take only buy trades. So let's identify the key zones in the higher time frame. As you can see, this low is our support zone, and this swing high is our resistance. And also see this wick previously grabs the sell side liquidity. It can be also considered as a key zone. So let's go further, means shift to lower time frame. See, in the lower time frame, price is at the resistance zone. Let's go further. See, this bullish candle just closed below the resistance zone. So we can consider it as an impulse entry. We will take this trade after volume entered into the market. See our results. These examples show how combining key zones, consolidation, time frame analysis, and confirmation can lead to high probability trades. And that's how you trade high volume candles like a pro. To recap, identify key zones, spot consolidation, switch timeframes, confirm your trades, and practice with real examples. If you found this video helpful, give it a thumbs up, share it with your trading buddies, and subscribe for more Forex strategies. I've got a challenge for you. Open your charts, find a high volume candle at a key zone, and share your analysis in the comments. Let's learn together. Thanks for watching, and I'll see you in the next video. Trade smart. If you watch this video up to this, I think you might like my videos. Please subscribe to this channel for more content like this. Share this video to your trading friends. Click on bell icon for faster notification when I uploaded videos in this channel. Thank you. This is the end of the video.